Greetings of the day to one and all. I see a Priyanka with our esteemed speakers and our dear coordinators. Sky High Symposium is a Wednesday series of programs conducted by the Committee for the Women and Young Members. It is one of the Women and Young Members Excellence Committee's initiative to not only disseminate information to the members on technical updation and non-technical skills, but also to empower and inspire them to come at forefront and realize their verbal skills. Sanidhi is a skilled chartered accountant currently working as deputy manager in the corporate and international taxation team at Deloitte, India. With a Bachelor of Commerce degree from Mumbai University's HR College, Sanidhi possesses a strong educational foundation. In her role at Deloitte, she primarily focuses on assisting clients in various aspects of taxation. Her experience spans across diverse industries such as infrastructure, renewable energy, telecom, and aviation. Sanidhi's expertise extend to a wide range of assignments, including obtaining government approval for FDI, advising on strategies for inbound and overseas direct investment, ESOP, etc. Aside from her professional achievement, Sanidhi has showcased her knowledge and expertise through her contribution to the field. She authored an article on tax deducted at source under Section 194Q in the e-journal Women Entrepreneurs Learn to Lead, a CS Study Circle e-journal published in August 21. So, without further ado, I would like to hand over to Sanidhi for her session.
Thank you, Priya. I would just like to share my screen first and then begin. Is my screen visible? Sure. Okay, so thank you all for joining on this session. This is the session on the external commercial borrowings and the related nuances. Before we move on to the things, I would just like to say that while many of you would already be aware of the basics, I would still like to begin with the basics for everyone's. We begin with what is ECB in the first place. So ECBs are typically commercial loans which are taken by eligible borrowers. The loan can be taken from recognized non-resident entities and individuals. Now, who are the eligible borrowers and who are the non-resident lenders? That we'll see in the future slides. The ECB can be taken for certain permitted end uses, which the RBI has given. RBI has put some restrictions that if for certain reasons we cannot use the ECB proceedings. Other than this, the person who has taken the ECB has to also comply with certain other parameters, which contain of minimum maturity, maximum all-in cost ceiling. And ECBs can be in the form of any freely convertible foreign currency, or it can be in INR. Now, one would ask what is the purpose of getting ECB in these two things, like either freely convertible foreign currency as well as the INR. So what we need to understand over here is basically that whenever RBI comes up with any master direction, it always sees to it that it protects its own foreign currency reserves. So if, let's say, I am borrowing in foreign currency and I have and I have to repay the loan also in the foreign currency, during the time when I'm keeping the loan, if the foreign currency rates are fluctuating, then as a borrower, I will have to bear the risk of the foreign exchange fluctuation. So that is why RBI has allowed INR denominated ECBs, wherein I take the ECB in INR and I repay also in INR. So whatever foreign currency exposure is there, it all lies on the lender and not the borrower, which are the Indian. Now we go on to the forms of ECB, like what forms the ECB can be denominated. If it is a foreign currency ECB, then other than the loans which we normally take from non-resident lenders, ECB can also cover floating or fixed rate notes, bonds, and debentures. One would have to take a note that only instruments which are other than fully convertible can be considered in ECB. For example, if let's say I'm taking a CCD, which is getting converted after 10 years, then converted to equity after 10 years, then in that case, that will not be covered under ECB. So if there is any non-convertible debenture, then it would get covered here. But there also the RBI has come up with a restriction that NCDs which are given to registered portfolio investors will not get covered in ECB. Other than these, we can also cover trade credits which are beyond 3 years in ECB, foreign currency convertible bonds, foreign currency exchangeable bonds, and even financial lease. If we look at the INR denominated ECB, now all these above things which we discussed for foreign currency ECBs, they're all applicable to INR ECB with few exceptions. The exceptions include that even preference shares which are issued to non-residents get covered in INR denominated ECB. But again, here the same condition applies, which is other than fully and compulsorily convertible instruments. So if I have a CCPS, then it will not get covered here. But a normal preference shares would be considered as ECB. Other than this, if an Indian company is issuing rupee denominated bonds overseas, then any investors investing in such rupee denominated bonds, it will get covered in ECBs. Before we move on to the nitty-gritties of the ECB, we should look at certain definitions which are very important for our further discussion. The first is all-in cost. Now, what is all-in cost? All-in cost is basically any kind of expense that I have to incur for servicing the debt for the loan that I have taken will get covered in all-in cost. For example, interest, fees, expenses, charges, guarantee fees, everything will get covered in all-in cost. However, it will not include the withholding tax that I have to bear when I'm making the interest payment to a non-resident. RBI also puts a restriction over here that the ECB drawdown, that means the principal amount of ECB which I'm taking from a lender, that I cannot use to make payment for the all-in cost payment. Let's say my principal component is 10 lakh rupees and my interest is 1 lakh. I cannot use those 10 lakh to pay the 1 lakh of interest. I have to use my own funds to pay this interest. The second is the benchmark rate. Now, benchmark rate is something which is really important for ECB because one of the reasons is that there has been a change in the past year in the benchmark rate. Earlier, LIBOR, which is the London interbank rate, which was being used as a benchmark. But as we all know, since last year, from January 22 onwards, LIBOR has been discontinued. So RBI has amended the master direction for ECB, and they have said that any international interbank rate will be permissible as a benchmark rate for foreign currency ECB. So, for example, now we have the Mumbai interbank rate, we have the American depository rate. One of the other rates which are getting really popular right now, a secured overnight financing rate, which is SOFR. These can be used as benchmark rate for the purpose of foreign currency ECB. If we have to look at INR denominated ECB, then we have to look at the rate which a government security would which a government security would bring in a market. So let's say I have a government security of 3 years, which has a rate of 3%. Then for my INR denominated ECB, I would use that 3% as the benchmark rate. Another definition which is very important is the definition of foreign equity holder. Now, foreign equity holder can be in 3 different scenarios. One is that if there is a direct foreign equity holder with a minimum holding of 25%, will get covered. If the foreign equity holder has an indirect holding of 51%, that will get covered here. And if there are 2 entities with a common overseas parent, then even those are all considered as foreign equity holder. And the last definition that I would like to draw attention to is a real estate activity. Now, the reason why we are is one of the prohibited areas for which we cannot use the ECBs. We'll come to all the other areas in the next slides. But this particular definition is very important for the reason that it is not just all real estate activities. They have narrowed it down to certain activities. Now, let's say what they have written over here is that real estate activity will involve own or lease property for buying, leasing, and renting of commercial and residential property or land. It will also include the fees which are paid for assigning real estate agent industrial park for townships, SEZ. The if I'm purchasing any industrial land for any project of modernization of expansion of units, and even that is excluded. Any other activity in the infrastructure sector is excluded. So all these exceptions are areas where I can use my ECB proceeds. But if I'm buying, selling, or renting, or I'm giving fees to any real estate agent for the same purposes, then for that I cannot use my ECB proceeds. Now we look at the key considerations for ECB. First is we talked about the eligible borrowers. We need to understand who are the eligible borrowers who can take ECB. One is they have given a blanket thing that any entity which is eligible to receive FDI is an eligible borrower. Other than this, they specifically said that port trusts, units in SEZ, SIDBI, Exim Bank are all eligible borrowers. Even other entities which are like NPOs and NGOs, which are engaged in microfinance activities, they can also take ECB, but they can only take INR denominated ECB and not foreign currency denominated ECB. Then we look at the lenders who can lend ECB under this regulation. So first condition is that the lender should be from a country which is FATF and IOSCO compliant country. FATF, which is the Financial Action Task Force, they come up with lists. They regularly keep on come with lists wherein they mark the countries which are blacklisted or grey listed. Now, blacklisted countries are countries which are not, generally conforming with international principles, and they're not complying with all the laws. That is why they have said that if any country is coming in the blacklist of FATF, then we cannot take ECB from that country. So right now in the blacklist, it includes Iran, North Korea. These two countries have been in blacklist for a long time. Since past 6 to 8 months, even Myanmar has been included. So we cannot take ECB from lenders in these countries. This list keeps on updating regularly. So whenever we are taking ECB from a new lender, we need to ensure that we look at this list before we go ahead with the transaction. Other than this, multilateral and regional financial institutions wherein India is a member, from there also we can borrow. We can also borrow from individuals. Individuals only if they are foreign equity holders in the company. So let's say I have a company whose shareholder is Mr. A in US. Now, if the company wants to borrow money from the spouse of Mr. A, Mrs. A, then that is not allowed. Only Mr. A can give the ECB to the company. Other than this, individuals are allowed to subscribe to bonds and debentures which are listed abroad of an Indian company. We can also borrow from foreign branches or subsidiaries of the Indian companies, but only with respect to foreign currencies. Then we look at the limit for which we can borrow the ECB for. So the basic limit over here is that we can borrow up to USD 750 million per financial year. Over and above this, we cannot borrow. If we want to borrow, then we need to take RBI's permission. If it is a foreign currency ECB from a direct foreign equity holder, then another condition that we need to comply with is ECB liability equity ratio, which is ECB is to equity cannot exceed 7:1. The equity over here would include your paid up share capital and your free reserves. If this ratio is exceeded, again, we'll have to go for the RBI approval. This limit is not applicable if the ECB is taken up to the extent of $5 million. Just a point that we need to think over here is that we talked about individuals as lenders, but we did not discuss whether individuals can be borrowers for the purpose of ECB. For that, we would have to refer to notification 3R of FEMA, which says that individuals can be borrowers, but up to the extent of $250 lakh, they can only take loan from their relatives. And the definition of relatives is same as the Companies Act. But this borrowing will not get covered under the ECB master direction. It is separately covered and governed by the RBI. Another important topic over here is again the minimum average maturity. Now we discussed that whenever RBI comes with any master direction, it always sees to it that it protects its foreign currency reserve. So minimum average maturity is one of their tools. When an Indian person is borrowing from a non-resident, they want to ensure that the foreign currency remains in India for an X number of years. For that, they have mandated that any loan which is taken as an ECB cannot be repaid before 3 years. Now, this is an average rate which has been given. It can they have given certain exceptions wherein the number of years can be lower and the number of years can be higher also. So all these exceptions can include manufacturing sector, wherein up to USD 50 million if you're borrowing, then the minimum average maturity is 1 year. If you're taking ECB from a foreign equity holder for the purpose of working capital or general corporate purpose, or for repayment of the rupee loan, then it is 5 years. If you're taking ECB other than from a foreign equity holder for working capital and general corporate purpose, then we can keep the money over here for 10 years. If the ECB is taken for repayment of rupee loan, which is availed domestically for capital expenditure, then it is 7 years. If it is other than capital expenditure, it is 10 years. Now over here, one more restriction which has been put in place is that for these things, B, C, and D, we cannot take ECB from foreign branches or subsidiaries of Indian banks. So we need to ensure that we take from a foreign bank itself. Change in foreign currency. Now let's say that I have taken an ECB in foreign currency, but I want to change it to INR because I don't want to take the risk of the foreign exchange. So your RBI is permitting me to change the foreign currency ECB to INR as well as to any other freely convertible currency. But when it comes to INR denominated currency, again, RBI is very protective. They said that already if we have borrowed in INR, then the foreign exchange risk is not there on the borrower. So then converting that to another foreign currency ECB will not be permitted, because then that would increase the foreign exchange exposure on the Indian resident. Now we come to the end use restrictions. Now these are the activities for which you cannot use the ECB proceeds. One is a real estate activity, for which we saw the definition earlier. So if the person in India has borrowed for the purpose of buying, selling, or leasing any real estate property, then for that ECB proceeds cannot be used. You cannot use ECB proceeds to invest in capital markets. You can also not use it to make any equity investment. This is a very important thing. If I'm taking ECB and if I want to invest in another subsidiary, that is unpermissible. I cannot use those proceeds. I need to come up with my own funds to do the investment. The other things which are given as restrictions are working capital purpose, general corporate purpose, repayment of rupee loan, which other than what has been specifically covered by the RBI and the minimum average maturity. I cannot even lend the money that I've borrowed to any other person if they are going to use it for all these restricted activities. So if I'm onward lending it, then I need to ensure that the activities that they are going to use the ECB for is not in the restricted portion. All-in cost stealing. So we had seen the benchmark rate, that the benchmark rate is now the internationally accepted rate. So over here, what RBI has said that if you're taking any loan, then your interest rate cannot exceed a certain percentage over and above the benchmark rate. So for example, if I'm taking a foreign currency ECB, this is an old ECB which was earlier linked to LIBOR, maybe now it is linked to some other interbank rate. There, if the minimum benchmark rate is X, then I can take a loan X plus 5.5%. If it is a new ECB, which is not linked to LIBOR, obviously, then the spread over here is 5%. So let's say the benchmark rate of SOFR right now is 2%. Then 2 plus 5%, I can borrow maximum up to 7% interest. I cannot pay interest to a non-resident lender above 7%. If it is an INR denominated ECB, then the spread over here is benchmark rate plus 4.5%. So if a government security rate is 2.5%, then 2.5 plus 4.5 again 7%. That is the maximum I can borrow. Other than this, if I'm incurring any prepayment charge, any penal interest for any default or breach, now these are the expenses which I cannot foresee before I actually incur these expenses. So for them, RBI has given us a leeway that up to 2% you can pay these charges, but that will only be 2% exceeding the interest rate, and this will not get covered in the all-in cost ceiling. So you can obviously give your interest as per the all-in cost ceiling. Over and above that 2%, you can pay for the prepayment charge and the penal interest. These are certain prohibitions which the RBI has put on the banks and the financial institutions. So what they're saying is that Indian banks, all India financial institutions, NBFCs, they cannot extend a guarantee on behalf of any borrower for taking an ECB. They cannot also invest in FCCB and FCEBs in any manner. Coming to the security, if let's say I have to create a charge on any of my assets in India for getting the ECB, then RBI is saying, okay, you can create a charge on your immovable asset, your movable asset, your financial securities. You can also have somebody else issue a corporate or a personal guarantee on your behalf. Obviously, it will not cover the Indian banks, because that is prohibited. But if there's any other person or any other company who can issue the guarantee, then that is also fine. We can do it, but the RBI has come up with many conditions for each of these assets, and we need to ensure that we meet all these conditions before we create any charge on these assets. Hedging. Now, if I have a foreign currency payable, then do I need to hedge my exposure? RBI says that it is not a mandatory thing to do. If you have a foreign currency ECB, then unless your regulator, so let's say I'm in a sector where the regulator of that sector is telling me that compulsorily you need to hedge your exposure, then only I need to hedge it. Otherwise, RBI is not mandating hedging for me. Only for the infrastructure sector, the RBI has said that up to mandatory 70% hedging has to be done. And the hedging has to be for the principal component as well as the interest component. So I have to hedge everything up to 70% of my exposure. If the average maturity for infrastructure sector is less than 5 years. If I have taken an INR denominated ECB, hedging is not mandatory. But if the overseas lender, which is the investor basically, if they want to hedge their exposure, then they can hedge it through derivative products which are available with the AD banks. Now we come to a very important part which we as chartered accountants would mainly have to deal with, is the reporting requirements for an ECB. Now, before we move on to the compliances which RBI has given, we should also talk about the compliances which are given under the Companies Act. So Companies Act will, if you are taking any loan, then the Companies Act requires us to take an approval from the board of directors. If it exceeds a certain threshold, then we need approval from the shareholders as well. This is obviously not applicable to the private companies. These approvals are very important, not only from the Companies Act perspective, but also when you are doing reportings with the AD bank under RBI. The AD bank will also ask you for a copy of your board resolution or your approvals from the shareholders. So we need to ensure that we have these in place before we do any reportings with the AD bank. Now, the first reporting is Form ECB. So Form ECB is basically when you are taking a loan, then this form needs to be filed before I get any money into India. So what happens is that if I have entered into a loan agreement with any lender, then I file this form with the RBI. RBI will look at the agreement. They will see that whether your terms and conditions are according to the ECB regulations. If it is fine, then they will issue a loan registration number, which is LRN, to me, which will be a number for my loan. Before taking this LRN, I cannot bring any money into India in form of ECB. If I bring in the money before filing the form, I'm in contravention of the provision. We need to file this form as soon as we enter into a loan agreement from that same month itself. If there is any change in the ECB parameters, let's say I am basis my discussion with my lender, it has been agreed that I will not pay the entire principal component back, then I am going to be repaying a lower percentage of the principal component. So such changes are there in the ECB, even that needs to be reported in Form ECB. And if such changes are happening in between the term, then we need to report this not later than 7 days from the date on which this change was effected. And we need to file a revised Form ECB. Form ECB2. Now, Form ECB was when we get the loan or when there is any change in the ECB terms. But RBI also wants to track what you do with the funds during that period. So, Form ECB2 is a monthly reporting which has to be filed by within 7 working days of every month. In this form, we'll have to first write the LRN number, which the RBI would have given us. Then we need to give them the disbursements of the loan which have come in the past. So, for example, I'm taking a loan of 20 lakh rupees. So, up to now, if I have taken loan of 15 lakh, 5 lakh is remaining to be taken from the lender. Then I will report that 15 lakh has been taken on so and so date. I will also have to mention that 5 lakh is expected to come within so and so period. I have to mention the exact date on which I expect to receive the money. Other than this, I will also have to give a utilization report as to how I have utilized the entire ECB. So ECBs, as we know, we can use it only for some particular purposes. For that, RBI has come up with some codes. Let's say I've taken my ECB for working capital purpose. So I will have to ensure that I put it in the form itself as to each and every utilization that I've done for working capital. I will have to prepare a breakup. I will have to look at my bank statements to understand what all expenses I've incurred. And if those expenses are incurred out of my ECB proceedings, I have to mention that this is so and so amount. Let's say 10,000 rupees is for my working capital. I have spent on first of the month, let's say, then 20,000 I spent on the 5th of the month. I have to give the entire month's utilization report. Other than this, I also have to mention the opening balance of the loan which was there, any loan disbursement which has come during the month, the money that I've utilized in the month, the money that I have repaid during the month, any interest that I have paid to the lender, and the closing balance. Everything has to be given in Form ECB2. If for some reason I don't have any transactions in my month, let's say I have taken my ECB 2 years back and I have utilized the entire ECB proceeds for my business, and as of today I don't have any balance left, but I still have a liability to pay after let's say next 3 years, then I need to continue to file Form ECB2 for every month, even if it is a nil return. And in the nil return, we can write that there is no utilization, but we need to make sure that we write that this is the amount of loan that has been taken in the past. Other than this, there are some other miscellaneous points which are related to the compliances. That if I want to change my AD bank, these forms are to be reported to the AD bank, and the AD bank will then forward it to the RBI. We are not required to give it directly to RBI. So for some reason, if I want to change my AD bank, then I need to get an NOC from the AD bank, and I can do so. But they will obviously ensure that you have made all the filings correctly in the past before issuing the NOC. If I want to cancel my LRN, let's say I have filed my ECB because I expected to take a loan and I got my LRN, but then for some reason, I'm not going to now get money from this loan. So I can apply it with the AD bank and say that I'm not going to get any drawdown. And once they verify that no money has actually been received in India, they can file an application with the RBI on your behalf, and they can cancel your LRN. Both these forms, Form ECB as well as Form ECB2, has to be certified by a chartered accountant. Since we are going to be certifying it, we need to ensure that we generate a UDIN as well. These forms are typically earlier required to be filed physically with the AD bank, but now after COVID, they have started allowing us to send it to them over email also. Even the signature via DSC, the director who is signing the forms, they can use a DSC to sign it. But again, it will be advisable to just align with your AD bank for these things. I have the draft of ECB and ECB2 forms ready with me. If at the end we have some time left, then we can just go through it quickly. Then this is the penalty for late filing. If let's say that I am not filing it on time, then what can RBI do to me? Earlier, these penalties are very, very heavy penalties. It was 5,000 for every day of delay up to 30 days. If the delay is beyond 30 days up to 3 years, then it is 50,000 rupees per year. And if it is beyond 3 years, then it is 1 lakh rupees per year. You should note that these penalties are per form, not per loan. So for ECB, form ECB, it will be a separate penalty. For form ECB2, for every month, it will be a separate penalty. So very, very heavy penalties were given in the ECB regulations in the past. But in the last year, they have realized that these were too heavy. So they have come up with a notification, which is Master Direction on Reporting under FEMA, wherein they have given us this formula. So this formula says that the minimum penalty for any late filing is 7,500 rupees. Plus, we need to add 0.025% into A into N. What is A? A is the amount involved in the delayed reporting. So let's say I've borrowed 20 lakh rupees in my form ECB, which I've delayed, then A will be 20 lakh. N is a number of years of delay in the submission, which is rounded to the nearest month and expressed up to 2 decimal points. So let's say I have delayed filing from ECB for 2 years, then N will be 2. What we need to note over here is that this LSF again is per return. So for ECB, form ECB, this is a separate LSF. For form ECB2, this is a separate LSF. If I've taken multiple LRNs, then I need to file this penalty for each and every LRN that I have. But the good thing which the RBI has done now is that they have capped the maximum LSF to the principal amount of the loan. So basically 100% of A. Earlier, because the penalties are so heavy of 50,000 and 1 lakh rupees per year, it many times happened that. So now they have capped it to the principal amount. So if you have to take an illustration, if I've taken an ECB of 10 lakh rupees without obtaining LRN, then there is a delay of 2 years of filing from ECB. So for that, the LSF will be 7,500 basic plus 0.025% into 10 lakh into 2 years, which is 12,500 rupees. Now, let's say that for 2 years, I did not file from ECB, so I don't have an LRN. If I don't have an LRN, I cannot file from ECB2 also because mentioning LRN is mandatory in form ECB2. Or do I have to pay the LSF from the point I got the LRN? So while this has not been given by RBI specifically, but practically in one of my cases for one of my client, we spoke to RBI and we argued that if I don't have LRN, I cannot practically file my ECB2. So that is why RBI had allowed us that they basically waived off the LSF for the first 2 years. And only from the day I got my LRN, if there is any delay in filing ECB from that day onwards, they will levy LSF for me. But for the first 2 years where I did not have LRN, I did not have to pay LSF for the ECB2s which are delayed because I had already paid my LSF for form ECB. Now, these are the conditions which have to be complied if I want to convert my ECB to equity. Now, let's say if for some commercial reason I do not have money to repay the loan which I have taken, then RBI permits me to convert the ECB to equity. Even the ECBs which are matured, like my maturity period has expired, even those I can convert to my equity, but I have to ensure that I follow the following conditions. Now, what are these conditions? First is that if I'm converting to equity, that means that I'm getting FDI in my company. So for that, I need to ensure that I comply with the FDI rules and regulations. So if I'm in a sector wherein automatic route, FDI is permitted under automatic route, then I'm good. But if government approval is required, then before conversion, I need to ensure that I have the government approval in place. When we convert it, we should also ensure that it does not result in any contravention of the eligibility or breach of any sectoral cap given in the FDI policy. So for example, if we take pharma sector in brownfield has an automatic FDI route available up to 74%. Over and above 74%, government approval is required. So if I already have FD in my company to the extent of 74%, if I want to convert additional ECB to equity, I need to ensure that I first take the government approval and then only I convert it. Other than this, I need to adhere with the pricing guidelines which are given in the FDI rules and regulation. I need to submit the valuation report with the AD bank when I'm converting it. I need to also ensure that I get the lender's consent. I cannot do anything without the lender's consent. I need to submit that letter with the AD bank before converting. In certain cases, we have also practically seen that the AD banks ask us to submit the board resolution for the conversion. So even that will have to be submitted. Let's say if I'm converting all the entire ECB into equity, then for reporting purposes, I need to obviously file from ECB2, but in that ECB2, I'll have to mention that this ECB has now been converted wholly into equity. Other than this, since I'm going to be issuing my shares to the lender, I need to also file from FCGPR, which comes from the FDI rules and regulations. From ECB2 over here has to be filed within 7 working days from the close of the month in which I have converted to equity. If I'm converting partial amount of ECB into equity, then in ECB, again, I have to file from FCGPR. That is a mandate because I'm issuing the shares. But from ECB2, I have to write that ECB has been partially converted to equity. The AD bank wants to note very clearly what you are doing in such scenarios. Now, parking of the ECB. Let's say I have entered into an agreement with the lender that I need to borrow some money for so and so purpose, and the lender has already given the money to me. But that money is not required in my business at the same time right now only. So what I can do is I can park the proceeds abroad. RBI permits us to do that, but they need to make sure. We need to make sure that we invest only in the instruments which have been given by the RBI. So these instruments include the liquid instruments such as deposits or products offered by bank, which are not rated less than AA minus. Treasury bills and other monetary instruments of 1 year maturity, again not rated less than AA minus, and deposits with foreign branches or subsidiaries of the Indian banks abroad. Other than this, we cannot park our ECB proceeds abroad. If I've gotten my ECB proceeds in India, but again, I'm not ready to use it in my business as of now, I can park it in India as well. So your RBI has permitted me to make a term deposit with any AD bank in India for a maximum period of 12 months, which is 1 year. And we should not create any charge on these deposits. So it should be kept in unencumbered position. With that, we have covered most of the FEMA related aspects of ECB. I would like to touch upon certain taxation related aspects as well. So if I'm taking loan from an associated enterprise of mine who is a non-resident, associated enterprise would have the same meaning which is given in section 92A, which we use for transfer pricing purpose. So if that is the case, then any interest that I'm paying to such non-resident lender is restricted to 30% of my earnings before tax, depreciation, tax, interest, depreciation, and amortization, which is EBITDA. So up to 30% of my EBITDA, I can pay the interest. If I'm paying interest anything over and above that, then that interest will be disallowed. So this is coming from section 94B of the Income Tax Act. It applies to all Indian companies as well as permanent establishment of any foreign company in India. This is not applicable to the businesses which are engaged in banking, insurance, or NBFCs. And this section applies only if my interest portion, which I'm paying to the non-resident associated enterprise, exceeds 1 CR. So 1 CR is the limit. Over and above that, section 94B applies to me. Now, if I have exceeded this limit of 30% of EBITDA and my interest that I have paid to my non-resident lender gets disallowed, then it is not permanently disallowed. We have 8 next assessment years within which we can use this disallowance. So up to next 8 assessment years, if let's say next year I have a higher EBITDA and I have the same interest to pay and I have the bandwidth of in that 30% limit, so the disallowance part of a previous year I can now take as an allowance. So just we'll have a look at illustration over here. let's say I have an EBITDA of 2000, amounts are in INR lakhs. In year one, I have EBITDA of 2000 lakhs. Interest that I need to pay to my associated enterprise is 700. 30% of my EBITDA would be 600. So my allowable interest is restricted to 600 rupees. The 100 will be disallowed and will be carried forward for the next 8 assessment years. Let's say in year 2, my EBITDA increases to 3,000. Again, I am to pay the same interest to my associated enterprise. Now the limit to me is 900 because of 30%. So here, 700 which I actually have to pay, plus the 100 which I disallowed in the previous year, I'll be able to take in as an allowance in this year. Another thing which is given as a proviso in this section is that basically section applies when I'm taking loan from an associated enterprise. Let's say it is a completely third party with whom I have no relation, and I'm taking a loan from them. Then also interest payable to such non-related enterprises can get covered in 94B only if my associated enterprise is giving a guarantee on my behalf or is providing any deposits to the lender on my behalf. So if I have to put it in form of an illustration over here, I'm a borrower in India and I want a loan from a non-resident, a non-AE lender. It's a non-resident. So I have no connection with this lender. I want to take a loan and I am paying interest to it. But before issuing the loan to me, the lender is asking me that can anybody else give a guarantee on your behalf? So I have an associated enterprise who can give a guarantee on my behalf. And this associated enterprise, obviously, I mean, it is holding more than 26% in my company. So it becomes an associated enterprise. In such scenario, 94B will apply even to the interest which is paid to a non-associated lender. This forms part of the taxation for the limit that we have to face for interest. Now coming to the withholding part of it, withholding tax. If you look at section 115A, it says that any interest that we are paying to a non-resident gets taxable in hands of the non-resident at the rate of 20%. And when we are making the payment, we need to ensure that we withhold the tax at the rate of 20% plus surcharge and cess, which comes to around 21.84%. But there is an exception given over here, which is section 194 LC. What does 194 LC say? That if an Indian company is paying interest on non-resident, then the withholding tax shall be limited to 5% only in the following scenarios. One, the money have been borrowed by it in foreign currency from a source outside India under a loan agreement which is between 1st July 2012 1st July 2023. Other than this, if we have issued any long-term bond, including any long-term infrastructure bond, before, again, 1st July 23, then even that gets covered here. If we have borrowed money in form of rupee-denominated bond, again, the date over here is 1st July 23. Then we can fall under this 194 LC, and the withholding tax rate shall be 5% only and not 28%, which is given in section 115A. But over here, every date which is mentioned is 1st July 2023. Now, this is already an extended date. We expected that in the past Finance Act, the government would extend these dates to a future period, but the government did not do so. So as of now, if any new loan basically is just being taken after from July onwards, then this 5% rate is not applicable and the interest will be taxable at the rate of 20% only. So your one point that we can think of is what happens to loans which have been taken in the past. Like let's say some loan which has been taken in April of this year, and I've been paying interest on it, taxing it at the rate of 5%. Then from 1st July onwards, do I need to now pay interest at the rate of 20% when I'm withholding the taxes? So to that, there are a couple of views. One of the view is that if you look at the language of section 194 LC, it does not talk about the interest payment when it talks about the date. So here it says that in respect of money borrowed by it under loan agreement at any time between 1st July, before 1st July 23. So one possible view over here is that if my money has been borrowed and the loan agreement is there before 1st July, then I can continue withholding the rate at the rate of 5% forever. Like even after July, I can continue withholding at the rate of 5%, and I don't need to comply with the 20% rate. Obviously, this will be subject to litigation in the future, but we'll see how the tax office come up with this, especially during the period. That after the budget came, what if somebody signs a loan agreement before 1st of July, but the loan money actually doesn't come to India? Let's say the money comes to India in August 23. Then would you say that 194 LC applies to such loans? This is one step further from the previous question that we discussed. Again, if you look at the language, there are two things over here to see. One is money borrowed by it in foreign currency and under a loan agreement at any time before 1st July 23. So one way to look at it is that this 1st July 23 is the date which relates to the monies borrowed, or if that is the case, then my monies have not come into India, then 194 LC cannot apply. But if I say that this 1st July applies to the loan agreement date, if my agreement date is dated before 1st July, then this section can apply. This is a very high litigation item, and it will have to be evaluated much in detail. But this is a question that we should have a look into. Then the last thing is that obviously, since the rates over here are 20% now, which are quite high, we can look at the DTAA benefit if available. If you're looking at the DTAA benefit, then we need to ensure that we see that the non-resident is eligible to claim the DTAA benefit. For that, we need to take the tax residency certificate from them and Form 10F. Form 10F right now can be taken in an offline manner. They can just sign the online format and give it to us. But from 30th September onwards, it is mandatory for them to file the form online. The government will come up with any utility on the income tax portal for the non-residents to file Form 10F online. And we need to take that in the same form. Otherwise, the assessing officer may reject our Form 10F. For DTAA, I've just mentioned over here a couple of countries wherein the rates are beneficial as compared to the Indian Income Tax Act. So let's say for Singapore, UK, and US, the rate mentioned for interest is 10% if the loan has been taken from bank. Otherwise, it is 15%. But both these rates are lower than 20%, which is given in the Income Tax Act. If we are taking loan from UAE, then it is even lesser. It is 5% if taken from bank or financial institution. Otherwise, it is 12.5%. If you're taking from France and Germany, the rate is flat 10%. So for all these countries, we should evaluate that if the non-resident is able to take the treaty benefit, then we withhold the tax at the low percentage. One more point of differentiation would be that the tax rates given in treaty are not subject to surcharge and cess, whereas in the Income Tax Act, 20% will be added by surcharge of 5% and cess of 4%. That is it from my from tax angle. If I have 5 minutes, then I can take you through Form ECB and ECB2. Can I get 5 more minutes, Priya?
Yeah, I think it's fine. You can go ahead. Take 5 minutes. Yeah.
Okay, sure. Then we'll just have a quick look at Form ECB first. So this is to be filed when we are taking the loan in the first place, before taking the loan in fact, and basis this RBI will give us the loan registration number. I have to mention whether this is an original or revised Form ECB. Let's say if I have any change in the ECB parameters, then I need to mention it over here. If it is foreign currency and INR ECB, we need to mention it. We need to see if we are falling under the limits that I had mentioned earlier, then it is under approval route. Then we need to give the basic details of the borrower, like the name and address, what kind of industry they are in, and other details. Then again, for the lenders and the borrowers, similar kind of details we need to give them. Here we need to mention the agreement of the loan. So loan agreement date has to be mentioned here. The effective date on which the agreement comes into place has to be mentioned here. The date on which I am getting the last disbursement of the loan has to be mentioned, as well as the date on which I have to make the last principal repayment to the lender, which is the future date, that has to be also mentioned here. If it is a hedge, if my industry requires me to hedge it, then I have to mention the hedging details over here. Within this, any guarantees, if there is any guarantor, then need to mention those details. For what purpose? Yeah, this is important. If I'm taking the loan for a particular purpose, I need to make sure that I write it in my form ECB itself. So let's say in form ECB, I say that I've taken the loan for working capital purpose, and then I use it for some other purpose. Then that is not permitted. The RBI has to know upfront as to what purpose you've taken the loan for. Then again, the details related to the ECBs are mentioned. Here we need to mention all the drawdowns. So let's say in the present case, I was planning to take a loan in 9 different tranches. Then each date, these are all future dates. We have to mention that on so-and-so date, I will take so-and-so amount from my lender. And the repayment schedule has also to be given. So let's say I'm planning to repay it in 3 different tranches. Then I need to mention all the dates here and all the amounts here. If I'm paying any charges or interest for these, then I need to state over here upfront. And if I've already taken some ECB previously, this is for that limit of 750 million. So to check that, they require us to give all these previous ECB details as well. And this form has to be certified by the director of the company, as well as a chartered accountant. They will have to sign over here, and we can just mention the UDIN and all over here. This is form ECB. If I go to form ECB 2, this is the monthly reporting form. Each month we have to report it. Again, here the codes are given. So for what purpose you have utilized, you can use the codes from this. We need to mention the LRN number which should have been allocated to us by the RBI. This is the amount which is as per the agreement, loan agreement. I give the borrower details. I also give them the disbursement of the loan which has come in the present month. So let's say out of this 20 lakh rupees, this 2,99,000 has been received in the present month. I have mentioned it over here. I am still yet to receive 2 different tranches of loan in the future. Then over those details also have to be mentioned here. Now this is the utilization part, which will take a lot of time. We have to prepare a utilization schedule, and we have to say that, okay, on so-and-so date for working capital, I used 1,20,000 rupees. For on so-and-so date, I used for working capital this 4,000 rupees. So we need to scrutinize the bank statements each month to understand for what purpose we have utilized the loan proceeds. If there is any balance amount which we have parked in India or abroad, then we need to mention it over here. For debt, if we are paying any interest or any principal repayment or any other payment that we are doing, we need to mention it here. If there is any change in the repayment schedule, we need to tell them upfront. Again, if there is any hedging, we mention it over here. And we need to mention what is the closing balance of the loan which has been taken presently. This is a summary which has to be given along with all form ECB2, which is the amount drawdown in the current month, whatever is drawdown before this month, whatever we have repaid or interest payment has been done in the current month, and what is the net outstanding balance. Again, this form also will have to be certified by the director of the company, as well as a chartered accountant, and we have to mention the UDIN. So I think that is it from my end. Thank you so much for listening to me. And if there are any questions, I'm happy to take up.
Thank you, Sanidhi Shah. I really want to, thank from all the CAs who are watching this. It was really a learning session for all of us. Also, I would like to take a moment to thank Preeti ma'am as well as Abhay so to start this initiative, which is like very useful. Regarding questions, I had one question regarding this.
that if you can, guide students that are watching this or already who are CA into industries, that what would be the future into this, or like if someone has little interest into this, how they can pursue it ahead to make it as a career.
So if I have to look at FEMA specifically as a career, then FEMA is one of the act which is not really, very well known in the industry as of now.
Yeah.
It has a very good future. It is also an act which gets updated very frequently. So you need to keep yourself updated about it. And with the transactions that are currently going, with the globe coming very near, there are many cross-country transactions. So this is something which everybody has to take care of. There are many companies who are not at all aware of the FEMA compliances, and most of the clients that we get, they come to us only after they have contravened the provisions. So we need to be very sure with the existing clients that we have. We ensure that we advise them well before they take any transactions to see that if there are any FEMA implications.
Okay. And if you can suggest like few companies, such as like you're working in Deloitte, but a few other companies where, this area is covered.
So obviously the big fours do have clients because they have multiple MNCs. They have cross-border transactions a lot. So big fours are one good area. There are other small consulting firms who are also advising, but the volume is obviously with the bigger firms.
Yeah. Okay, Sanidhi, thank you so much.
Thank you.
Yeah.
Thank you, Pooja. Thank you, Sanidhi. Hello, everyone. Now, after such a power-packed technical session, let's introduce ourselves to a concept of Ikigai, a very important non-technical aspect of our lives. So now Ikigai is a concept. So, where we describe a place of balance where our needs, desires, ambitions, and satisfaction meet finally. And to elaborate on the subject and guide us through the path of Ikigai, it is a great pleasure to introduce our next speaker for the evening, CA Labdhi Botadra. So Labdhi is a CA who has cleared her CA with exemption in 5 subjects. She's currently working with Deloitte in the risk advisory domain. And she had the opportunity to represent Bombay in the 4-week residential program of the Center of Excellence, and has also participated in multiple community and social events as speakers. She's associated with Adhata Trust, where she takes art sessions for senior citizens over the weekends. And something that I like the most that she's very fond of and finds her peace in all the sunrise and sunsets. So may I please request Labdhi Botadra to take over and guide us through the session.
Thank you, Saloni. Thank you, Saloni. And thank you very much, ICAI, for this wonderful platform for all of us to get along and have technical as well as non-technical session midweek. So thank you very much. Without any further delay, let's just get into the session. I'll just quickly share my screen. Okay, so the topic for the day is Ikigai. What exactly is Ikigai? Ikigai is basically a Japanese secret to a happy life. It is a happy life and a long-lasting life. So basically, it says, okay, so just hold on to all your thoughts for a minute and let's just imagine a life where you have the reason to wake up every morning. You have a life with a life expectancy of close to 125 years or more. Just a few seconds, imagine this life. How would it be? I am sure it felt very nice, right? So this is exactly what Ikigai is. Ikigai is basically a secret to a happy and a successful, long-lasting life. Let's start this session to know about the secret about this long and a happy life. Ikigai, again to mention, where most of us lack in pronouncing it in a right way, it is Ikigai.
which is a combination of two words. One, which is iki, which means life. Second, gai, which means worth, worth to live a life which is valuable. So, Ikigai is a Japanese philosophy which says you need to have a reason to live a life, a longer life, a life which is full of joy, and basically a life where you are doing something which you really like to do. You are enjoying your life and not just for the sake of living a life wherein you are waiting to, you're just waiting to retire. So basically, there is this place, Okinawa in Japan, which falls in the top 5 blue zones of the world, where they live the longest life, where they have a life expectancy of close to, say, 125 years or more. It's a very happy and a peaceful life where they live, wherein they have actually cracked the secret to live a happy life, wherein they bring a balance between a productive life and doing something where they really enjoy and something what everyone is doing what they enjoy and what they love doing. So here all of us what we exactly are trapped in a life where we are just running, living a life of survival, just living a life where you're just running behind things, everything which is going on very fast to make it better. So there is this concept wherein it says you need to discover your ikigai, because ikigai is specific to every individual based on their likes, dislikes, based on their approach towards life. So basically, once you discover this concept of ikigai, it will help you to slow down in life, wherein you will exactly enjoy your life and you will be able to live a life in a more meaningful manner and obviously a longer life rather than just a short span of life, like obviously not short, but a life wherein you're just running without any real balance in life. So ikigai is basically, it's a very famous book. If you all can see, this is the book of ikigai, a Japanese book. So it's a very nice book which clearly explains you the secret and the magic to life, to crack the funda, to bring in the balance, to find a purpose to life. A very first thing which says that you need to find a purpose in life, for what exactly are you meant to be in life. A life which is worth living for your own self, based on your own policies, your own morals, your thinking, your approach. Second, it says that the people of Okinawa have said that these people have stayed for a good long span of years. So, if we take the advice from these people, the ones who have lived longer, so it will obviously help the others also to live a better and a long life. So, this book has a few recommendations, suggestions, stories of how they exactly live a balanced life. And the third most important says that it says you need to have a very healthy lifestyle to live long. Broad three lessons of this book. Obviously, won't be able to cover all the lessons of this book, but three main lessons of this book, which ideally covers the entire concept. First, which says that lesson number one, which says if you want to live a happy and a longer life, what you need to do is you need to discover this ikigai, which says you need to have a strong and a very prominent reason to wake up every morning. Let's just imagine, every single day where our alarms clock ring early in the morning, I'm sure all of us have this Monday blue. We are just waiting for the weekend. We are waiting for the Friday evenings. But in this case, if we crack the funda of ikigai of our own self, like finding ikigai for ourselves, we won't be ideally waiting for only Friday evenings or the weekends. We will be living each day as if Monday or Sunday doesn't make a difference. Every day is the day you are willing to live and you're not waiting for the retirement. So it says you need to have a strong reason to wake up early in the morning and to live a life. So Okinawa people in Japan have cracked the secret wherein they say to bring in a balance. They have cracked this funda of magic of life, and they have proved by living a longest life in the world. As I mentioned, this is a Japanese word ikigai, which is a combination of iki and gai. Iki is a life and gai is a value. So a life which is worth living, which is valuable for all of us. Further moving on, it says, to discover your ikigai, what exactly does it say? It says a life where one does not have to retire because you continue to do what you are loving and you are living a very happy life. You are, do whatever you find gets you up in the morning. Just make sure that you never give it up. So that is what Okinawas in Japan did. That they did not have this policy or this concept of retirement. They used to live a life and they would continue working till the last day and continue their hobbies, their passion, and working as the way they would live in the mid 30s, 40s, the way how they would live their life. The second lesson of this book says that the elders in Okinawas know a thing which says that it's so basically the secret also has a lot to do with the well-being, a balanced life, a healthy lifestyle, simple eating, a simple lifestyle, and not more of materialistic. So if you want to live the life as they want, a happy life, which is not very easy, the funda which they follow is to worry less and to live a happier life. Also, a few quick recommendations and suggestions mentioned in the book says that the old Okinawas who have lived for 120 years and above have given these 3 top tips. One being you need to have this approach of smiling more often, having an open heart approach towards everyone, and eating a healthy and having a healthy lifestyle, practicing waking up early in the morning. This was about the first 2 lessons of this book. Third lesson, which says staying healthy, is to keep moving throughout the day. So basically, it says that to adapt a healthy lifestyle, what one needs to do is to inculcate the habit of moving around, which says let that be a quick walk, practicing gardening, singing karaoke, and just to have a simple exercises throughout the day, which will keep each one healthy and a healthy lifestyle. These were the top 3 lessons of this book. Further, it says what exactly was Ikigai. Ikigai, the flowchart says that Ikigai is basically a reason to live, wherein it's a combination of needs, your ambitions, your desires, which is subjective to each one's goals and missions to achieve. Wherein it says once you figure out your own ikigai, it will be a change in your own lifestyle, which will lead to a happy and a successful life. As I mentioned, what exactly, I just said to discover the ikigai, but to discover the ikigai, what you have to do, it is you need to follow a life cycle like a pie chart, wherein it comprises of these 4 factors. One being, you need to answer these 4 questions to yourself. One being, what do you love? Second, what does the world needs? Third, what you can be paid for and what are you good at? So only when we answer all these 4 questions, the answers, and there will be a balance wherein the midpoint, which is an ikigai, which is the magic of secret to a happy life. So it says that question number 1, which says what you love. So, well, what you love will be a combination of whether your passion or your mission, which is again subjective. Moving forward, the second factor, which says what the world needs. Well, what the world needs will be again a combination of your mission towards life and your vocation. The third factor, which says what you can be paid for, because ideally, something for what you're not paid for will not lead a happy life. So it says it could be your profession or your vocation. Factor 4 says what are you good at? Well, what are you best at? Will be your passion or your profession. So the balance to all of it will be ikigai, the secret to crack a happy life. So to quickly discover ikigai, each one of us can just answer these questions bring in a balance to whatever is the midpoint, and you get the answer which says, oh, this is what you will be looking forward to as your life. Also, a quick pointers about this book, which says, as I mentioned, this book Ikigai says the first foremost is finding a reason to wake up in the morning. Second, which says that there is an excitement each day because every day is the same day. Unlike you don't wait for a point of time wherein you just live your life, and then at the end of your life you wait, okay, at my retirement I'll be doing this and that. So you need to inculcate your hobbies, your passion, what you love right from the beginning. Second thing says that discover your purpose. Purpose is subjective and individual, so each one has to discover their own purpose or real meaning to life. Third one says the art of staying young while you're growing old. A very beautiful line written in the book which says the art of staying young while you are growing old. Fourth point, little things that add up to a long life. A few tips which are given in the book, which says that it's not always about the big fancy things in life that adds up to a happy life. It is also the little simple things that brings up to a long and a happy life. You need to find a flow in everything you do. You need to have a rhythm in everything you do with a disciplined approach is what is also one of the learnings of this book. Another pointer which says learn words of wisdom from the longest living people in the world, which says there are a couple of stories mentioned in the book wherein they are sharing about their life, of how they lived life differently from others. But however, now this is a concept which is, appreciated by everyone. So it should be, if we read the book, it shares a couple of stories about the people, how they've lived this happy life. Basically, if we crack the funda of Ikigai, it is nothing but it is clearly a roadmap of living a life which is desired by you. It will also add on to a shine, to a spotlight. Basically, it will be, you will be doing something what you love. So your Ikigai will, obviously, if you are doing something what you love, so you will be happy and you will be rewarded with a better lifestyle, and you will have this sense of achievement which will be like a rewarding to your life, which will end up adding to your life, adding value to your life. And once you have a clear goal, a clear understanding, once you get out of your bed, it will be, each day will be a bright day for you. Long story short, what I exactly mean is Ikigai is a map that travels a circle of gifts. With this line, what I mean is Ikigai will be a map, a roadmap. You know what next, you are bringing in a balance between everything. Something what you like, something what you enjoy doing, something for what you're getting paid for, something at which you are good at. So, it's so rewarding. I just found this concept so amazing because so far what we actually have been heard from us, from the elders, says that once you have a good education, a good job, you are set, you are living a good life. But what I feel is after reading this book, I feel, oh, there is a lot more to life as well, other than just these two things wherein you study, you do a good job, and you're living a good life, you're waiting for your retirement. By the age of 45, 50, you want to retire and you want to live your life. Well, it doesn't work that way. After reading this book, I felt, well, there is so much more to life wherein you can actually bring a balance to it and you can live 50 to 60 good odd years following this Ikigai of your life. So once you follow the map of Ikigai, you will see yourself. You will see yourself happier because you are doing something what you love. You are doing something what you're good at. Well, ideally, you are also doing what the world needs, and well, you are doing something for what you're getting rewarded for. So a combination of all is actually a very good balanced approach in a productive lifestyle where you're also enjoying. So it's a very simple thing. If someone says, how do you want to solve the mystery of life? Well, the answer is Ikigai. If you discover, if you find, if you cater to the Ikigai, find for yourself and stand by it, follow it. That ideally will be the answer to everything to crack a happy lifestyle, a balanced lifestyle. So, without any further delay, I would say go discover your ikigai, go live a life where you are actually meant for, without waiting for the retirement to do. Go find your ikigai, bringing to an end, because can't really go on a lot. I mean, because it's very good if you all would read this book, or, this was just a quick summary. Hope you all liked it. And thanks for joining in. Thank you, ICI and the team, for this wonderful platform. I'll be happy to answer a couple of queries or questions, if any.
Thank you, Ms. Labdi. I'll just check if there are any questions in the question
Sure.
tab.
Sure.
So basically, there's my own question.
Sure,
So basically, I wanted to ask you that with the normal routine, it gets difficult to give time for this process. So will you guide that how smoothly we can take out the time
Sure.
and how we can proceed with it?
Sure. So basically, as I said, so Ikigai, discovering Ikigai is not a one-day process. It's like
Yeah.
an ongoing process, wherein you need to cater to two things. So there is this concept of full-time Ikigai and a half-time Ikigai, and eventually then you lead to an Ikigai. So this half-time Ikigai is where all of us are between our careers and jobs, or maybe working. So between the 9 to 5, so there is this two things wherein before your 9 to 5, you need to bring out the time, and after your 9 to 5, which is a good 8 hours, which is 5 a.m. in the morning to 9 p.m. I mean 9 a.m. in the morning, and in the evening 5 p.m. to 9 p.m. So again, so 4 plus 4, 8. So in the initial days, what you need to do is you need to cater to, say, maybe you take out 2 hours a day, or maybe 1 hour a day in the beginning, to actually figure out how things work, because it's not very easy to bring in a balance, because all of us are so used to just catering to a routine lifestyle of just getting things done, and then you can just do you just keep Sunday for stuff to enjoy, and then Monday to Friday you're just working. We don't really try to have this habit of bringing in a balance wherein even on a Monday or a Sunday we can do both the things. So what I feel is, in the initial stage, we need to bring in a balance where maybe, say, 30 minutes in a day we can bring in before our 9 to 5, and after a 9 to 5, 30 odd minutes will make a difference, and every step counts. So each day at a time, I would say. So,
Correct.
yeah. I hope that was it answered your query.
Yes. So basically, that's the thing. I personally have this book, but I have not
Okay.
I have started it, but I couldn't continue it. So
Okay.
basically, that's why I asked you the particular question.
Okay, no, it's a very wonderful book, and that is
Yeah.
the reason I have summarized it. I did not want to mention everything here itself, so that people tend to go and read the book, because it's a little summarized form is always better than, rather than just
The
explaining
detail.
all the lessons at a go. So I just shared top 3 lessons, which would obviously impact everyone, whoever is watching this session. So
So basically, the message you gave, I'm sure everyone would be, it's correctly passed on, that everyone would be motivated to read the book.
Yes.
Firstly, I would like to thank you for such a wonderful session. It was enlightening session, and of course, with everyday routine, it is tiring, and I am very sure that everyone are going to try at least to find their
Yeah.
Secondly, I would like to thank CA Preeti Savla and CA Abhay Chajarji for organizing such a unique topic. And lastly, I would thank you all audience for the patient hearing and for involving yourself so much. Thank you.
Thank you, Kajol. Thank you, ICI. Thanks for joining in.
Thank you.
Thank you.